Hi, this is Dirks, co-author of the book, The New Marketing Analytics. In this ongoing series that I've been putting together on FinTech and its impact on traditional banking, I just saw and read an article the other day I thought I just have to tell you about. It was in the Wall Street Journal, and it was entitled, How to Inch Your Way to Wealth with a Phone. And it covered this, again, part of the fintech or financial technology movement is for companies who do not come from generally traditional banking roots, are really built up by people who are looking to serve customers who have investment and other demand account needs through applications, through websites, entirely borderless, meaning you can do this anywhere. And so fintech, I believe, once again, is going to have a continuing impact on banking, whether you're a bank or a credit union, and it's going to have a continuing effect on how you maintain your relationships, or if you're able to keep the relationships that you worked so hard over the years to maintain. Anyway, this article basically focused on a couple of applications that are phone-based, iPhone or otherwise, Android. And one of them was an app called Stash. And so, interestingly enough, Stash is an investment tool that allows people to buy portfolios of exchange-traded funds with as little as $5. And interesting, what I noted was Stash is, and I'll read this here to you, Stash is up to approximately 420,000 customers with 3,000 new accounts opening daily. Let me repeat that again. 3,000 accounts opening daily. Now you may say to yourself, well, I mean, this could be, what is the deal? Anyone with $5 can start investing, and how appealing is that to us, and blah, blah, blah. Remember this, FinTech is about technology, but it's about data and relationships. And I actually should say it's really about relationships and then the data that follows. So the point here being is that these FinTech opportunities or business models like Stash, for example, how many small banks or even big banks are opening 3,000 new accounts every day? That's 3,000 relationships that they never had before. And what they're really doing is, as the article pointed out, and it was written by Jason Zweig, one of my favorite financial writers, it really was the continuing democratization of investing, for example, and providing access to investments to even the smallest investors, those that normally don't have a lot of extra cash available. So anyway, Stash is one of them. Another one here is another application called Acorns. And they had about 850,000 accounts in April of 2016. They currently have about 1.4 million accounts. And they're opening up, actually in January, according to Jason's article, they opened up 125,000 new accounts alone. And Acorns charges $1 a month. And so, and Acorns works a little different. They basically, you link your debit and your credit card accounts to the Acorns account, and they round up your purchases, and that difference in the roundup is what gets put into an investment account on your behalf. So for those of you who are looking for ways to save, and there are probably millions of potential investors out there who, they live paycheck to paycheck. They don't really have the opportunity to invest much of anything, if anything at all. Most of them probably invest zero. But there are potential relationships. How do you capture them in your market? Well, these applications, these FinTech business models are doing just that. And they're doing it at a very aggressive pace. So I just, want to make that, kind of known to some of you out there who are figuring or looking at how do we deal with the growing FinTech business model and its ability to start eating around the edges of our customer base. and taking customers that normally if you're a traditional bank or credit union, you might not even get because they might not even have a DDA, a demand account. So anyway, I would take a look at those. I think it's a pretty important trend. I think applications like Stash or Acorns and the other ones that they mentioned here in this article are the ones you have to watch, and they're the ones that you're going to have to figure out how can we, in fact, as a small bank or as a regional bank or even the larger banks, how can we drive products like this, because it's these kinds of financial technology products that are starting to move the needle and starting to move relationships and data over. Remember, when you get the relationship, you start to accumulate data, and that data becomes really what arms you as a financial service to be able to go out and grow those relationships and start to move and provide additional products. I just read the other day that SoFi, which is basically a lending FinTech business model. SoFi lends, does refinancing on student loans, which is where I think it started, and it also does things like mortgages, etc. Well, it bought a FinTech business model that does a lot of traditional banking, like checking accounts and savings accounts, to add to its business model. So you'll see SoFi becoming, banking without borders. So for those of you in your boardrooms and in your executive meetings, if you're in a bank or a credit union, no matter what your size, you should be talking and thinking about these things. I hope this was helpful. Maybe it spurs on some discussion. This is Dave Dirks. Thank you for spending the time. Of course, take a look at our book, The New Marketing Analytics. You can get that on Amazon, or you can go to our website, www.newmarketinganalytics.com. Thank you and have a great day.